Where's your brother? No, yeah, but I mean, that was years ago, but quickly, let's move on. Where's your best mate then? Has he got a vent now?
All right, good morning, everybody. Let's get going here.
Great phone there yesterday.
All right, so U.S. markets had a bit of a, I saw one guy called it the Bart Simpson pattern. You can see there where the line is drawn. We kind of ran up from the opening, and then we broke down. It kind of looks like Bart Simpson's head there on the intraday pattern and the S&P. It's kind of a pattern that you don't see all that often, so that's why it's kind of a bit surprising. The guy was making fun of it, but I think it's important. We weren't able to hold on to gains yesterday. The markets just feel a little bit overextended ahead of really, really uncertain earnings season that's coming up quite soon. We've had the highest percentage of earnings revisions to the downside on S&P 500 companies in almost a decade this quarter. So I really think that that people will definitely have some nerves going into the earnings season in the U.S. markets. We had big automakers that released their June sales, which were pretty solid. But obviously the market's kind of focusing further down the line to the jobs report. Another interesting thing that happened yesterday in the States is the White House announced that the implementation of the healthcare the healthcare mandates for businesses wouldn't go in effect until 2015. That's really important because those guys are going to be gearing up. We're going to be gearing up for that next year. Probably delaying hiring, probably trying to cut costs elsewhere. So I think it'll be a good thing for the economy that's actually been put on hold. In fact, I think that's a lot bigger news than the market's kind of made of it. So it's really important that's happened. I think it's just a worry overhang that's off the market now in the near term. All right, Asia got crushed overnight for the most part. We're down quite solidly. Our call yesterday that commodities might outperform looked good for about the first hour of the day, and then that didn't look good anymore. So the mining stocks ended up getting kind of killed toward the end of the day. Really sold off hard. It was quite disappointing, especially after a rally in some of the physicals. This morning, obviously, we're popping in and we're seeing crude above 100. Light sweet crude, West Texas Intermediate, above 100 for the first time in I think it's been the first time in a year. We'll show that chart in a minute, and there's a couple things that led that shrinking U.S. stockpiles, but the big thing obviously was Egypt. The violence that broke out there last night. They're talking about a government coup. Obviously, we know that Middle East turmoil is never going to help the oil price. Sit low for very long. So I think that's really important. As that calms down, we'll probably see oil start to back off again. But that's what we're looking at the moment. All right, we had cautionary out this morning from Adcock Ingram regarding a non-binding offer from CFR Pharmaceuticals, potential cash and shares offer to acquire the entire issued share capital at a price of $73.51. That's not fixed. I think that's just what it works out to in terms of price. And CFR Pharmaceuticals will seek a secondary listing on the LSE, on the JSE. So keep an eye on that this morning. If you're trading that this morning, don't go offered at best 45 Rand below the price. All right, China, we had non-manufacturing PMI numbers out this morning. Again, a little bit disappointing. HSBC services PMI numbers were actually slightly better, so I think the market maybe shakes it off a little bit. We've got PMI service numbers from across the entire European region. You can see there. We've also got European retail sales. We've got local business confidence at 11:30. We've got, and then we jump into a lot of data out of the States: mortgage apps, ADP employment change, trade balance, initial jobless claims, ISM non-manufacturing composite, and the DOE crude oil inventories number. The reason why today's such a heavy day in terms of data is because of tomorrow's holiday. Independence Day, July 4th in the U.S., so markets are going to be closed. And it makes it really difficult as well, yeah, because today is a half day also, and markets are going to be really thin from that side. I mean, I can tell you from my experience, nobody is going to be probably working the day before 4th of July, or very few people will be. So volume in the States will be light. I even think volume in Europe will be a little bit light. So just be careful out there today. That's going to flow through to us, and there's a lot of data out there. I mean, it just could get reckless today between the low volumes and all the data that's going to be out. So, just maybe sit tight, play a little bit smaller than you normally do, and we go from there. All right, let's jump into the maps. All right, first thing I wanted to show is, so we'll show West Texas real quick. On the year chart, and you can see there, I mean, that one little wick that we did get above 100, I mean, but it didn't manage to close on that day above 100. But in terms of a closing basis, yesterday, first time we've been able to get above 100 on light sweet or West Texas. I think really important. We haven't seen this price in a long time, and we've kind of been running in this sideways channel here for the entire year, and that's about a $14-15 channel. So this thing potentially can really make a move higher. I'm sure a lot of people since this level have been so consistent as sort of a top, somewhere from the line that we just drew there around 98 down to around here. I wouldn't be surprised if there's a few shorts that need to be shaken out before this thing can calm down a little bit. So just be careful here. This thing could really run a little bit more potentially, unless it drops below that level quite quickly. All right, we'll have a look at the Aussie. We'll show a 30-day chart here. Deshaun Runman put me onto this one this morning. What we're going to do is just shorten it up a little bit here. I'll even shorten it up a touch more. And you can see really a really beautiful support level that we kind of been building onto. We had kind of been flagging going into this morning, but we've managed to drop support here. You can see this morning where we opened up. I think that's obviously it's bearish that we've dropped that. We've also dropped this little uptrend that we had popped into. So this is a little bit of a breakdown from short-term support. I really think that we could easily see quick 300 points to the downside here in the breakdown, which will only really take us down to about 34,800. From there, it's anybody's guess, but that's kind of the target that we would look for in this breakout this morning. So I think there could be some more downside here in the Aussie this morning, but bottom line, 35,100. We've broken that kind of crucial support here on the short term, and I think definitely can get a little bit weaker. All right, we'll look at Aspen. Aspen obviously is made this huge spike up over a couple sessions and just kind of held there. Same sort of thing on the shorter timeline. You can see how we've kind of put in a bottom there. And what I would look for, I mean, you could look at this a couple different ways. I mean, you could theoretically say that we kind of breaking out of the same sort of flag pattern, but to me it's not definitive enough. I would wait to see this thing take out its highs. It's ripping around 10 rand at a time, so waiting for another couple bucks for this thing to potentially break above 228. It's not the end of the world. So watch this thing. If we get above 228 on Aspen, I think you got to play on the long side of it. We'd be looking for about another $6 of upside there in the short term. So just watch that one closely. If it gets above 228 or below 222. Once we break out of that range, I think we could have a nice little move one way or another. All right, we'll look at Woolies real quick, and we'll show this a little bit longer term. I'll jump in. I'll show some. I'll just plug in a moving average real quick here on the 200-day. Just a little extra visual effect here, and you can just see here how there is one kind of, if you take this level and you can go back off of it, it's a bit of an inflection point. You can see here we topped about there, we bottomed there, we also bottomed around there. So this level that we broke up through, which was the previous level that we bounced to, it's at about 67.50, is quite crucial, and it kind of really touched up around the 200-day. As of yesterday, if we just zoom this forward a little bit, You can see here we closed basically right at the 200-day, a touch through the 200-day moving average, and definitely above that little inflection point that I think is a little bit key and woolly. So watch that this morning. 67.50 we're going to need to hold on the pullback early this morning, but I think if we can then we can push up and kind of get back above this 200-day at around 61.10 or 68.10, we could see a further upside here in woolies. Just watch those two levels quite closely. All right, let's have a look at Grindrod. Sorry that I missed this one yesterday. I should have been showing this one yesterday. Just saw it this morning. I was quite upset because you can see on Friday this continuation pattern. We really, and this is the pattern that, you know, from my point of view, I mean, it kind of looks a little bit cup and handle-ish, but you know, from my point of view, these are the patterns that have been working the best for the past year and a half. Every time these stocks are kind of breaking new all-time or at least multi-year highs or lows on these continuation patterns, they've been almost sure things, hardly short of a sure thing, you know, over the past few years, maybe a year and a half here, and we broke out of a range from, call it 1975 up to 2150. So we'll be looking for about $1.75 to the upside there, which really takes us to around 23.25, which unfortunately we got a lot of that yesterday already. So I'm coming to you a little bit late with this, but Grindrod definitely looking good. Probably has a little bit more to the upside this morning, or the next, you know, over the next session or two. If we do get back down here and test at 21.5, I think it could be a nice little pickup there. Okay, we're going to show. Old Doug's call from yesterday again. Just go over this again real quickly here, and Tiger Brands. Tiger Brands, you can see there really coming down here to test. We got another little push up this morning, testing trend line resistance here, and I really like this play for a breakout if we break out. I mean, obviously this morning markets are going to open a little bit weaker, but this pattern also has been quite consistent. I know that we have stretched our legs quite a long way to here, so I would be very careful to front run it. This morning we'll probably see a pullback, but if we can really get up, I would look for that level, maybe, you know, getting up closer to 310. At 310, I would feel quite comfortable on calling it a breakout, and I would think that we can buy into some Tiger Brands there. All right, Mr. Price, I'm going to show Mr. Price. We had a little bit of the reason why I want to show this is same sort of thing. I mean, we're taking out recent highs going all the way back to this year. So we're looking at 6-month highs on Mr. Price on a closing basis. You can see there a little bit of a breakout. This has been one of the stronger ones on the board. I mean, it's one of the few that's, you know, within a few percent of its all-time highs, which is literally only about 5% away, 4 or 5% away. And I think that this is significant, you know, and you kind of look at the bottom of this pattern to where we're breaking out now. This is looking like we could have a hell of a lot more room to the upside, at least taking us to previous highs, and I think, you know, potentially even higher. So the fact that this is kind of one of the stronger ones, you know, really makes you like it. And anyway, if we can hold above this recent high here that was at, let's see, closing high, or about 138. If we can stay above that in the next session or two, I think this thing really could have some more legs. We'll stick with the retailers. We'll show Foschini. Foschini also, Steinhoff. Steinhoff taking out 2 days ago. It's also its recent high. And more than that, it's this little flag pattern that we were in, that we finally broke out of. That we kind of came out of this little vicious downtrend that we had here, and we kind of started flagging from between 23.5 and maybe call it 25. We've broken out to the upside. I would put the target on this up near 26.50, 27, which actually lines up quite nicely to where we would come in against some resistance up here on the longer term trend line resistance. So watch Steinhoff. I mean, I think I'm going to pull back down to close to 24.5. This is definitely probably worth a bit of a nibble. It's really starting to outperform some of the retailers. And then the last one I'm going to show is Bank of America in New York. You can see Bank of America here. If I just zoom forward, we had a little bit of a head and shoulder pattern here, not a little bit, an absolutely beautiful head and shoulder pattern, which are really kind of coming up to test. At the moment, you can see there where the neckline is. We've put in 3 or 4 days of consolidation here around the neckline. Hasn't really been able to punch through yesterday. We showed a little bit of weakness. I think I think this thing could really potentially push lower. I wouldn't be surprised if this test down here around 1150, which will be close to and right at the time probably a 200-day moving average if it can't make above this level in today's session. All right, and the last thing, just a question this morning from Phil. What is the likely effect of having ADP and initial jobless claims on the same day with a public holiday in the U.S. tomorrow? I kind of touched on that a little bit earlier, just saying that, obviously, today is going to be a light volume day regardless because it is a half day in the States. You're not going to get the same sort of reaction that you normally would get because there's just not the same amount of people, I think, focusing on it. But obviously, it's gonna create a little bit more impact on one day. So we could potentially see a little bit of outsized moves because of that, because there's a little bit lighter volume in the market, and so markets will naturally be a little bit thinner. And with more data kind of coming on the market, if they both kind of swing in the same direction and they're both a big miss or a big beat, we really could see kind of an oversized move on the back of that. So just be careful of that today. All this data that's happening on one day that you're going to see light volume, just got to be, especially into the afternoon session, got to be really, really careful today. That's it for today, guys. Thanks a lot.